Welcome to The Real Money Show, the number 18778 Silver, the website, guildhallwealth.com. My name is Jeremy Wiseman. I'm joined by Jerry Correa. And if you are a follower of the precious metals markets, it has been an exciting month and it's only getting warmed up. So much is happening in the markets. And we've been calling a lot of it here on The Real Money Show earlier than most. And we want to stay on that trend and talk about today the fate of the Federal Reserve. We've talked about the Federal Reserve a lot on this show, but knowing that there's a crash course of having Ron Paul potentially audit the Fed, the man who wrote the book called End the Fed, this could mean a big trouble for the Federal Reserve's fate. So we're going to get into that a little bit later in the show. But first, Jerry, what a week for national mints halting sales. Do you want to tell us a little bit about that?
You know, Jeremy, we've been watching these trends, and these trends are very exciting for us because all roads lead to gold and even silver. Don't forget silver, the fate of silver, and the fate of these exchanges that control the price are at risk. They're on the crosshairs right now, and we're seeing a great hoarding. A lot of mints are saying, you know what, I'm going to hold on to it. We're not going to sell it. We saw the U.S. Mint even holding and halting the sales on some silver eagles. That's huge. And now we have the South Korean Mint halting sales of their bullion as well. This is the great hoarding. And just like Neumeyer said, this is going to lead to unobtainium prices. When you cannot obtain the physical to satisfy some of your contracts, there's going to be a psychological break, and you're going to have a run for it. Similar to the break that we had when COVID lockdowns told us we couldn't get our toilet paper, this is a lot bigger. This has a lot of repercussions and ripple effects around the world because there's derivatives. And we know the toxic derivatives are in the quadrillions that are on the bank's balance sheet. And we're talking about paper derivatives. So when you see these countries, they realize, wait a minute, our central banks need this stuff. We got to halt it. Thanks for buying it. We've been telling the citizens in South Korea, go buy it. You know, in South Korea, you can go to the corner store, put some money in the vending machine or swipe your card, and you can buy a 10-gram gold bar. Wish you could do that here in Canada. I think this is going to be a trend happening here in Canada. Canadians are wondering, if you have central bank gold and silver, why don't we? Canada's central bank has no gold reserves. We do have gold in the ground, but this is a great focus of who has it. He who has the gold makes the rules, and they're hoarding it right now. It's crazy.
Well, that's a great take on why they're halting sales. You're saying it's potentially because they are trying to keep it for the central banks. When I've looked at the halting of sales in the U.S. from the U.S. Mint in the past, I always took it to be that there's so much demand from the public and they don't want to show that demand for the public. So what they do is they halt the sales and basically prevent the stat line from rising. It's, nope, we only sold this many this month. Yes, we halted sales, but we maxed out at this much this month. Right. And so it was a way to prevent the numbers from looking bigger and bigger. Yeah. I know it's ironic that in Asia, South Korea, and China that they are halting sales when they've been actively telling their citizens to go out and buy it.
Yeah, exactly. But they do see the importance. The CEO of the second largest gold producer, I think it was this week or sometime, I think it was yesterday perhaps, he was quoted as saying gold is the new reserve currency of the central banks, which really rebuts some of our old gold advocates who are still blackpilling, still chirping about central bank digital currencies. And this new golden era is going to have huge implications and negative implications to the central banks. But the central banks own gold, so they're pretty insulated. It's not going to have a negative impact to them. But knowing that this is now a shift, global reserve currency, yes, indeed. But China right now has the Chinese the Central Bank of China, or it was the Shanghai Gold Exchange. They are actually in the middle of some pricing control. In fact, Jeremy, they are limiting the price upwards. They're trying to quell the demand, and that's the one way. But you can only do that for so long because the squeeze happens, and we know the impacts of squeezing a market and the implications on higher prices.
And don't forget, one of the biggest news things that came out in the past week is that China opened up. I don't know if it's a test that they're doing, but they're opening up their insurance companies to hold gold, something like 1% that they can have as part of their holdings for insurance companies. That in terms of demand on physical gold would be absolutely enormous. And that doesn't mean it would be capped at 1. It just means, hey, as a start, we're going to open this up for insurance companies to own 1%. Now, could you imagine, as Canadians, if our pension plan had gold in it since 2000, when the price of gold was trading at $300 an ounce? It's trading it's just under $3,000 an ounce. Do you think the pension plans or any unfunded liabilities would have half the problems if they had an asset that was growing in value? So when we talk about, this is the biggest news that came out last week, and we've been talking about this on our show, is right now the Treasury has 8,000 tons of gold valued at $41 an ounce. And all they have to do is monetize the books and say, we're going to mark to market that gold. And all of a sudden, they're going to find over $800 billion. So when we're talking about debt to asset values, all of a sudden, the assets of the Treasury goes way up. And that's not even accounting for further increases to the price of gold or further increases to the holdings of the Treasury. Your thoughts, right, Jerry?
No, that's exactly it. And then you release, you're going to release, again, the psychological. Like, it's not going to just be a revaluation to the market price from $42 to today's value of $2,900, $2,940 spot price. You unleash the what's been holding back. I think the psychological and the resistance that has been holding back gold from being released. When people see that this is, especially here in North America, when you have adoption, when you have people participating in the market, you have the natural move of the market starts to propel the prices a lot higher than where we are at spot. It's going to be very interesting to see this happen. It's going to unfold that way.
And sometimes there's certain things that can come out that can, be negative towards the market. Often CPI data should be that. Can you talk to us a little bit about what we saw this week with regard to CPI data, what was expected for the price of gold, and what actually happened?
Yeah, so the big number this week was all eyes. So there were some Federal Reserve members speaking. Powell spoke a couple times, but the main news piece that we were following was the CPI data that came out yesterday, February the 12th, where we were watching the U.S. CPI inflation numbers rising higher than expected year over year. The expectation was 2.9, so it came out higher at 3. When that came out at 8:30 in the morning, I was watching that, and I said, okay, we're going to have a big pullback in precious metals. That was the narrative. Everything has been reversed. Inflation is higher, therefore gold and silver drop. It's a reversal, right? You would think that gold and silver would actually be rising, but the narrative goes that, well, inflation's rising faster. This is a huge Fed pivot issue. They pivoted too soon. Look, guys, inflation continues to rise. So therefore, the Federal Reserve will need to get back to work and start raising rates again.
Right.
And you saw initially, within the first half an hour, gold and silver were off. Gold lost about $50 in 30 minutes. Silver was off about 1% in that time. But
so
by 9 o'clock, gold and silver broke out of that low. It was bid up. People came to the market, started to buy, and gold ended back up normal, actually on the plus side, in the green. So the Federal Reserve and their rate cuts and their rate hikes, it's an absolute failure. Gold and silver are resilient despite what the Federal Reserve does. And you know what? There are some people are saying that this is a Fed issue, that They started cutting too soon. It's a Fed failure. But you know what? The CPI is not 3%. They've been lying. So it's not a Fed pivot crisis. It's actually the crisis. It's a CPI lie. They've been rejigging the numbers from since the 1980s, Jeremy. So that is the problem. It's not the Fed problem, really and truly. It's the way that the CPI has been calculated.
And not just the calculation, but you bring up a good point. It's that the CPI data is being interpreted through the lens of how the Federal Reserve will respond interest rate wise to this data. It's not, oh, the CPI came in hot, there's inflation. That would be good for gold. Instead, it's, oh, CPI is hot, therefore they might raise rates, or they will keep rates where they are. Well, the rates are what is good or bad for gold. It's so backwards. I think this will dovetail nicely into our discussion on the fate of the Fed coming up in the next segment. In the meantime, if you want to take part of the gold revaluation, you can see it's being hoarded. It's being moved and repatriated from London to the U.S. All these countries are making sure that they're acquiring it, and there's shortages all over the place. This means a one-way ticket to much, much higher prices, in our opinion. And if you want to take advantage of that and not be left behind, the number to call is 1-877-8-SILVER, and the website, guildhallwealth.com. Hold physical, allocated, segregated gold and silver in your registered account. That means no counterparty risk, no having to depend on other investments and just having quote unquote exposure to the market, but actually having hold in your hand physical gold and silver. You can even go to the vault to personally audit those holdings. Again, the number 1-877-8-SILVER, the website, guildhallwealth.com. We are enjoying the new bull market. And the new bull market in gold and silver, Jerry, is not your old bull market where you were buying because you were worried about government corruption and the wealth stealing through inflation. These problems still do exist, but they're rapidly folding in a way. And we're looking towards the future, which is how are you going to bring value back to the US dollar, back to the Canadian dollar? How are you going to increase trade, fair trade across multiple countries? How do you get countries to want to invest in treasuries again in the U.S.? The sale of treasuries over the last few years has been increasing and moving faster and faster. And how can you buck that trend? All of these things are leading to, in our opinion, a gold-backed treasury, something Judy Shelton has talked about. More and more people are really chattering about this online and on videos, Jerry. And then there's also the revaluing of gold, because the higher up the value goes, especially if it's on the books of central banks, then the easier it is to balance out the debt, right? Mm-hmm. You might not be paying down the debt, but your assets are all of a sudden worth a lot more. That sounded weird. A lot more. They're worth a lot more that,
we get it.
That it helps, right?
Yeah.
But you were just talking about something before the break, so I wanted you to get it on air. What you were about to say.
Oh, but before I do, Jeremy, we got to talk about who's coming on the show next week. We got,
okay.
As you know, we've been following trends for a very, very long time, and I'm so excited to actually have him on the show. We've invited, and he's accepted to come on the show next week. Very honored to have John Williams from Shadow Stats coming on next week. So you must be you got to tune in. Make sure you save that show. However you follow on the station 640 or on YouTube, follow this show. John, he's an MBA, he's an economics genius, and his Shadow Government Statistics website has been an electronic newsletter service that is exposing and analyzing flaws in the current U.S. government economic data and the reporting. And it talks quite a bit about how they have rejigged the numbers, not just in the U.S., but here in Canada, starting the 80s. It had a significant impact on how we read inflation and measuring it, and how they changed the methodology changes. Ultimately, it just drew criticism, right? Because you're impacting everyday consumers, senior citizens. They are reliant on the honest number to receive honest value checks every single month from the government. So if you're reducing that rate just because you want it for your own purposes, you're you've unjustly taken away from the people. So we're really happy to have him on next week. And you know what? He's not the only one doing it, Jeremy. It was actually Larry Summers. He was an American economist who served as the 71st U.S. Secretary of the Treasury in 99 to 2001. And he actually reported the same work. So confirming John Willing's report, you can even check it out at the National Bureau of Economic Research. It's a government website talking about the cost of money. It is a part of the cost of living. You cannot omit certain costs. You can't take out the cost of your mortgage from the inflation numbers. You're going to start reducing it and lowering that economic barometer. So a lot is being revealed, and we are, I guess, re-leveling the scales of not just justice, but truth. And part of that, to segue into the next topic, is what came out earlier this week. It came across, as you know, we follow the Silver Academy, and the Trump administration earlier this week ordered the Consumer Financial Protection Bureau to stop working. This could be the most bullish news in silver and gold in the past 50 years, they say. The Consumer Financial Protection Bureau, the CFPB, they allegedly, Jeremy, protect consumers in the financial markets by enforcing laws. They regulate financial institutions. They educate customers, handle complaints.
Wait. Oh, okay, hold on. I think I know where you're going, Jerry. What you're going to say is that the Consumer Protection Agency puts in laws to protect gold and silver investors from quote-unquote volatility in the market?
Yeah, exactly. For years, the CFPB has been this powerful force in regulating financial markets, often intervening in ways. We talk about, who's this plunge protection team that always comes in, swooping in like Batman or Superman, in ways that distort the natural market forces. It's a sudden removal from the equation, and this could pave the way for a more organic, market-driven approach to finance, and one that aligns closely with honest money, with Austrian economic theory. The Austrian school emphasizes this importance of free markets, right, and sound money, typically favoring precious metals like gold and silver as the basis for stable monetary system. So when we see like little reversals like today or yesterday, where you have a positive or more inflation being shown by the CPI, and then gold and silver go back up, it's actually looking pretty normal to me. So we'll see how this works, but things are being aligned. And this is the bureau that helped enable practices such as excessive quantitative easing, money printing, bank bailouts, talking about bail-ins even. I mean, this goes on. They just intervene.
All under the guise of protecting people.
We've heard that before, right?
The number 18778-SILVER, the website, guildhallwealth.com, to acquire actual physical hold in your hand gold and silver. You can buy it direct. You can buy it over the phone or use our e-store, guildhallpreciousmetals.com. And of course, you can hold it in a vault for ease of liquidity and security. And you can even hold it in a registered account as well. Jerry, I know you use the analogy of both Batman and Superman. I think for our COG friends, we'll stick with the Batman one, okay?
Yeah, that's right.
I think that the idea of transparency is huge, and that brings us to our next topic, because the auditing of things makes these institutions, departments transparent, and allows for the people to get behind and almost have a mandate for what you're going to do next, right? Mm-hmm. So the Federal Reserve doesn't have audits, and I think that they should be very scared of Doge auditing the Fed. And I think that Ron Paul is a guy who has studied this for a very long time. He wrote a book called End the Fed. He also wrote a book called The Case for Gold in 1982. So he understood, and he's, everyone knows he bought gold in 1971. He's been holding it all the way since back then. In his book, The Case for Gold, he completely unmasks the Federal Reserve for what they do. it's one of these books that's up there with The Second Look at the Federal Reserve. But, Jerry, this is when I hear the idea of auditing the Fed, I just think about things we've talked about on this show. We've followed the story of Fed employees and people on the Federal Reserve Board who have used insider trading and gotten very wealthy. We had Timothy Geithner who didn't even do his taxes, right? And I think the biggest thing that would surprise people if they audited the Fed is to find out that the Federal Reserve was handing out money to banks all around the world during 2008. We talked about how major banks in Canada received funding from them. Or to find out that, for example, Canada is borrowing money from the Fed all the time. And that part of our taxes is to go to pay back the interest on that. Now, they could use the Bank of Canada for no interest loans, but they choose to not do that. And
right.
They haven't done that since the 70s, right? So I think an audit of the Fed would be quite revealing, and I think it would knock the Fed down a bunch of pegs from the wizards behind the curtain to, these people who are either incompetent or nefarious. What's your take?
We've been following this story for a long time, even having Edward G. Griffin talking about the creature from Jekyll Island on the show. This is it. This is the main fight. I think this is the last straw here. When we talk about ending the Fed, Ron Paul was interested. He was offered a position by Elon Musk to join Doge and get into the Federal Reserve in some way, shape, or form. He didn't express a yes or a no, or a yes, definitive yes, but he did say that he's interested in guiding the direction of the Federal Reserve, and but not in charge of the Fed. I don't see him being in charge of the Fed. His book was called "End the Fed." I think he just has a huge distaste for what they have done to the people, to the country, and to the credibility of the U.S. dollar. But he still believes in the state and in the country. He does push to audit the Fed and America's gold reserves, and recalling repeated efforts to block this transparency. He understands that this battle is real. Like we know, it's ideological, as the current monetary system is crumbling under huge debts, inflation, and even authoritarianism. This is a huge move, and to usher in Dr. Ron Paul, I mean, his great work over the course of 50 plus years in his lifetime has been committed to just honesty and helping, and it would have been such a shame to see his legacy just die in vain. But to give him a chance to see the U.S. and the world move away and break the shackles away from a communist manifesto idea of having a central bank in charge of the currency of the United States. This is huge. What was interesting to me was he said that we have to look back. We have to look back in history, was what Ron Paul said, and specifically to the things that Aristotle quoted about money, which we talk about all the time, the 5 characteristics of money. And just to remind you, your money has to be portable. It must be divisible, durable, scarce, and recognizable. If our money is not these things, and it's simply not a store of value, it's simply just a currency. So I'm excited. I am rooting Ron Paul on, and we're seeing a culminating effect of transparency. People are running. Doge is on fire. We're following the money. The money is leading into and through Canada. We need to see a Doge here in Canada. I'm seeing this. I see this happening very soon. People are scrambling, and those who are scrambling the most are usually the ones who have received unjust funds from who? Us, the taxpayers.
The number 1-877-8-SILVER, the website guildhallwealth.com. Jerry, you were on fire right there. I applaud you. In the next segment, let's revisit David Webb's book, The Great Taking. Is that an event that could still possibly happen? Should we be black pilling or white pilling? The number 18778 silver, the website guildhallwealth.com. Get your physical precious metals today. Don't miss this bull market. We believe the market's about to become unleashed. You can go to our e-store, guildhallpreciousmetals.com, or you can visit the website, guildhallwealth.com, and find out how to hold physical gold and physical silver in your registered account. By the way, Jerry, I'm sure you've seen that gold and silver are, I think, in the top 3 performing assets in 2025 so far. They're both up over 10%. They really are on fire right now, and everything that you're seeing behind the scenes, you're not going to read this in your mainstream newspaper or even hear about it on your mainstream radio, but you certainly are going to find out about it here at The Real Money Show. And one of those things is we've been talking and following the story of the mass exodus of physical product from the LBMA in London, and basically what everyone is calling a repatriation now over to the United States. I think it's because they're going to open the Treasury door. There will be your 8,000 tons, and now you can remonetize it. But of course, there have been massive delays, and no better way to rationalize those delays than to have the LBMA hold a webinar to explain why they can't deliver the product that should be a snap to simply deliver because it's already pre-owned by someone else. And let's break it down. The bottom line is they have this whole webinar all to say, we just don't have the vans. That's it. We're going to deliver. Guys, we need vans. That's it. You know?
Did you see that meme that van was in the tunnel? He couldn't make a 3-point turn in the tight tunnel.
That's right, the Austin Powers thing.
Yeah.
And
so another one, the LBMA said that there is endless physical silver and finite paper contracts. What a clown show! This is just yet another panic rant by the LBMA, similar to the silver squeeze in 2021. So hilarious.
But what was massive this week, Jerry, is on CNBC, Peter Boockvar came on and said Judy Shelton concept of the gold-backed bond is viable.
Yeah. And
he actually talked about it.
And it's all culminating. It's like one person saying it first, and then they agree. This is a remonetization to revaluation of the gold and silver markets. Look, when the headline shows us today that the U.S. is facing $329 billion in banking unrealized losses, the banks are underwater. Your banks are underwater. And guess what? Your insurance companies that cover these banks, the CDIC and the FDIC, who are so conveniently, just like the LBMA, are saying, don't panic. I just made a commercial to show you, just in case if you drop your wallet, I'm here to pick it up for you. I saw that CDIC commercial. So hilarious. But Ray Dalio said today, and he addressed the Trump administration, this debt needs to be addressed. And this is all the same story.
Okay, so this comes back to this because and again, Peter Boockvar talked about this. You revalue the gold that's on the Treasury's books. Okay, then you back the Treasury with the gold. The Treasuries become popular, right? Everybody wants a piece of that Treasury instead of the ones that are being sold off. And now you have to go out and get more gold for the Treasuries that are being bought up. And that's putting pressure on the supply side of the market, pushing the price up. And by the way, who wouldn't want a higher price in gold if you're backing your Treasuries with it, right? So now you're fulfilling the MicroStrategy concept of buying more gold, therefore pushing the price of gold up, right? This was the infinite money loop, right? It's quite similar when you think about it. Yeah. But the pressure it's exerting on the supply side is crazy. You're seeing these excuses for why you can't deliver. And then yesterday, the Shanghai Gold Exchange limits the gold price increases to 10% from the 12th of February. They have limit up days ahead, Jerry. This is something you talked about many times on this show about that clause, the 5462 clause.
Oh,
right?
The COMEX rule?
Yeah, that's what this is, right? Limit up. They're saying, no, if this thing goes up more than 10% in a day, we're cutting this off.
They're going to try to. They have to try to limit. And you're seeing witnessing the modification of the lease rates. And I loved your theory this week, handcuffing those who use the leases the most, which would be Europe and the Bank of England, the ECB, all of these recipients who have been using these lease rates for the purpose of getting more money off of the collateral. They're not using that anymore. You have just handcuffed these entities who have just been spending recklessly your taxpayers' money. But it is just all leading towards, hoarding the gold, making sure that you have it. And if you don't have it, I'm sorry, this is going to impact you negatively.
Yeah, the idea is that if you can borrow gold and to fulfill, you can help keep the price down. But what if you get to a point, whether it's Basel III rules or law and order, and saying, look, you can't have a market function like this where you're borrowing 400 ounces of paper for every 1 ounce of gold or silver. That's got to change. And when that does change, you start to get real price discovery. And I think we're headed towards that. Now, I'm not in favor or necessarily believe in the markets close on a Friday and overnight you wake up and it gets revalued to 10,000. I'm sort of more along the line of a steady retreat in prices and a consistent gain in the markets. And of course, that is going to benefit the people who buy in first, because a 20% gain on $1,000 gold is $200, but a 20% gain on $2,000 is $200. Or sorry, it's $400, right? So now what happens if gold goes to 10,000? Your 20% gain is now $2,000, right? So it benefits those who get in early. And of course, as the more expensive gold ends up getting, the better it's going to look for silver. So you're even more better off to head that off and get into the silver market sooner, because unlike cryptos that are infinitely divisible and there's no barrier to entry, when gold is actually trading at $10,000 an ounce, people are going to make the economic decision to buy silver that could be trading at $250 an ounce. $250 is a lot cheaper than 10,000, but those type of movements in the market could push the price from 250 to 300. 250 to 400, and no one's going to bat an eye when the price of silver is comfortably trading above $100 an ounce. It's just going to be. That's how it is. And these type of numbers in these markets is what's going to take care of the debt. I've talked about this. I know we got to go to break, but I want to put this out there. In 1971, if the U.S. owed $1 million to Charles de Gaulle in France, they would have had to give up 28,000 ounces of gold. That's almost a full ton, okay? If they would have revalued back then up to 350 and even said to the guy, give me 4 years, right? I'll give you the product over time. If at $350 an ounce, you're only giving France back 2,800 ounces instead of 28,000.
Right.
Okay? So you can pay off the debts. There's always enough gold at the right price. Keep that in mind as we go to break. The number 18778-SILVER, the website guildhallwealth.com. A couple years ago, I got to think it's a couple years ago now, Jerry, David Webb came out with this book called The Great Taking, and he did this whole video with it. And at the end of the day, what he was basically saying is any investments that you own, even your car, can be taken away from you, that there's these clauses written into the contracts that allow for the banks to seize the assets because you never really owned them. And it really freaked out a lot of our clients, and I would explain to them that can't work if you own the physical gold in your hand. If you've purchased that product, and even if it's sitting in a vault, there's no counterparty. That this whole premise depends on a counterparty. So yes, if you lease a car, there's a counterparty. If you're financing a home, there's a counterparty. If you have investments, there's a counterparty. Those investments have the company and the banks or the trading companies that are handling those things. There's all of these small print. But I want to ask you, And so his idea was, there could be a great taking. World Economic Forum is going to come in and they're just going to take all your stuff. I want to revisit that. Are we still worried about that, Jerry? And how close are we now? How black-pilled should we be?
You never forget the past. I think the past is the greatest teacher, and we always understand how the enemy will try to attack, and they will go after your bank account, and they will try to go after your money and your wealth, which has been the case for a long time, stealing our wealth through inflation, lying about it, talking about it's only 2%. Meanwhile, it's 14% inflation. Seeing the bank accounts getting frozen, number one, indicated that they will go after your bank account. So therefore, the attack, and as Russia had to, quell the sanctions, you had to get off the SWIFT system. That the time, like Jim Rickards talked about, is holding wealth entirely outside of, number one, the failing currencies and the failing banking system, but it's the digital and undigitizing your wealth. So once you undigitize and you get your hands, if you cannot hold it, you don't own it. But once you have allocated gold in the vault or outside of the banking system or even in your possession, you're pretty well protected. And, this is a huge shift. We're seeing a paradigm shift from just seeing gold as you mentioned earlier in the segments. Gold has grown beyond just being a hedge. It's now positioning one for being a growth for it being a growth catalyst for your portfolio. So it's a shift, and I think we are now positioning for some equilibrium and in the system and righting those wrongs.
And in that situation, where do we see the potential price headed for both gold and silver? Short term, midterm, long term. What's your take?
Now that we have a new, our fundamentals have changed from just a hedge, from currency devaluation, inflation, supply and demand. Yes, these things have evolved. Now we're seeing remonetization and revaluation, scarcity-driven growth. Year over year, silver mining showing less and less silver coming out of the ground. Huge demand coming from military, industrial, and now we're seeing a monetary convergence between the two. You have left and the hand coming together. So it's a growth catalyst. And this is ultimately leading to huge, massive participation in a very finite market where you have participation. Only 1% of the population that runs into the ownership of gold and less than 1% of our population owning silver. You eliminate all investable precious metals available. So you're going to have to go after it. You're going to have to keep it. You have to hoard it. You'll have to take it if you have to. If it's owed to you, you take it back. And that's what we're seeing. The rush is going to be great, and it's going to unlock, what Harry Brown, the permanent portfolio investment strategist, said. When the paper money systems begin to crack at the seams, the run to gold will be explosive in price and explosive for your hard-earned wealth in your portfolio.
Do you think that if we had a silver squeeze now, the way we did in 2021, that it would have a much bigger effect on the market, that it would have real lasting effects on the market, not just intermediate effects of pushing silver to 30 and coming off quick and not just taking product off retail shelves, but would we see the market actually be forever changed by something like that if it were to happen today?
I think so. The contracts are hitting record levels today, with buying exploding well above average now. This is beyond the silver squeeze. The demand coming into the U.S. from London, that we're seeing the squeeze, and the squeeze will ultimately lead to a new discovery, a new price discovery mechanism, where the entities that once gave us, the legacy exchanges that once gave us this quote-unquote paper price, the spot price, these places, London and New York, never mined 1 ounce. We don't do any mining in London or England or New York. It has to shift to a market where where they are responsible for the discovery of mining and discovery and development of the mines. So this is going to lead to higher prices because they need to get paid. Mali is taking their gold back. People are taking their gold back from these mining companies because long gone are those days. You're not going to ravage my land and my people for a $32 price. And watch this price of silver at 32, 30, folks. This is going to be it. We're going to see the silver squeeze, propel this price into a third gold cycle where we saw 1,400% gains in gold each cycle prior from 2000 to 2010. Remember, silver outperformed gold during these cycles. So if you're looking for something undervalued for your portfolio, which is economics 101, buy low and sell high perhaps. Maybe you're never going to sell because I believe the silver prices are going to be kept high for a very, very long time.
And remember, if you want to hold physical gold and silver in your registered account, Guildhall can help you do that. We store with Brinks. You'll have the access to go and personally audit your holdings. We see very good things to come. The market is changing for the better, and we're just looking forward to everything that's going to come. If you've missed a show, please check us out on YouTube, Rumble, Spotify. Follow us on X. We're putting out some great information throughout the week on X and join the conversation. We want to thank everyone for joining us this week on The Real Money Show and can't wait to speak to you next week. Again, the number 18778-SILVER, the website, guildhallwealth.com. Thank you so much. That's a wrap on The Real Money Show.